Hello everyone and welcome back to the channel. If you've been paying attention, the market's been pretty unpredictable lately. After a string of down plays, we saw a surprising pump yesterday with the Nasdaq jumping over 2%, mostly driven by the tech sector with Nvidia leading the way. But with this kind of volatility, it's easy to feel like you should be doing something different. So today, we're going to dive into how to navigate these big market swings and make smart moves, whether the market's up or down. Let's get into it.
Can I do something real quick? No. 3, 2, 1.
Let's break down what's going on. We've had a lot of focus on inflation, and with the latest CPI report showing signs of cooling, that created some optimism. But the market's pump yesterday wasn't just about inflation. Nvidia in particular played a huge role in driving the tech rally. At a Goldman Sachs conference, Nvidia's CEO talked about the insane demand for their AI technology, which helped push the stock higher. This sent a ripple effect through other tech stocks and pulled the Nasdaq up with it. However, this doesn't mean the broader economy is out of the woods just yet. Sectors like real estate and autos are still facing pressure from high interest rates, and those could weigh on the market in the weeks to come. The takeaway, while we're still seeing a tech-led pump, it's important to remember that volatility is still in play and not every sector is benefiting equally. Now, I know it can feel like you're on a roller coaster. One day your portfolio is deep in the red, and the next stocks like Nvidia are driving a huge market rally. But these swings are normal. The market comes in cycles, and there are always ups and downs. The key is to not let these day-to-day movements shake you from your strategy. Yesterday's rally shows why you don't want to panic sell during the dips. A lot of people probably sold last week thinking the market was going to keep falling, only to miss out on this bounce. That's why we got to stay focused on the long game and resist the urge to make decisions based on short-term emotions. So what's a smart move during times like these? Here are a few strategies to keep in mind. The first strategy I want to bring up is sticking to your plan and staying flexible. If you got a long-term investment plan, now is not the time to abandon it just because the market's been volatile. But staying flexible can also help you capitalize on opportunities. For example, before yesterday's pump, tech stocks like Nvidia were trading lower, and that might have been a great chance to add to your position. So while you don't want to stray too far from your overall plan, be open to making adjustments if certain sectors look oversold. My second strategy is dollar cost averaging. If you've been dollar cost averaging, this volatility is exactly when that strategy shines. Whether the market is up or down, you're buying at different price points, which smooths out your overall cost basis. Nvidia and other tech stocks had a big rally yesterday, but they're still off their all-time highs, which means there could be room to build your position over time still. Lastly, evaluate what you own. With the potential for rate cuts coming soon, certain sectors like real estate could see a boost. Now's a good time to review your portfolio and ask yourself if there are any sectors you've overlooked or any positions you should trim. The market is giving us a lot of signals, so it's important to stay on top of how these macroeconomic trends might affect your investments. Let's also talk about what you shouldn't do, because that's just as important. The first thing not to do, and the most obvious, is panic sell. It's tempting to sell when the market is down, especially when headlines are all doom and gloom. But if you sold before yesterday's rally, you would have missed out on those gains. Nvidia's performance is a great example of how quickly the market can turn around, and the lesson here is simple. Don't let fear drive your decisions. The second thing not to do is time the market. Trying to perfectly time the market is a losing game. Nobody can predict the exact bottom. Those who were waiting for Nvidia to dip even lower likely missed the rally yesterday. Instead of trying to time every move, focus on staying consistent with your investment approach. The long-term strategy will outperform trying to guess every market move. And look guys, at the end of the day, this market volatility is going to be with us for a while. Whether we get a rate cut soon or not, the big takeaway is that you need to stay disciplined with your investment plan. Yesterday's pump shows that the market can flip on a dime, and that's why it's so important to not get caught up in the daily noise. Stick to your strategy, look for opportunities, and stay patient. So, I'd love to hear from you guys. How are you handling this market? Are you holding, buying the dip, or waiting it out? Let me know in the comments down below. If this video gave you a better idea of how to approach the market right now, hit that like button. And if you're new here, subscribe for more insights and strategies to help you stay steady through all this volatility. Thanks for watching, guys, and I'll see you guys in the next one.
No! 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 No!